So what we talked about last class was sort of the general approach behind costing, behind how you cost, right? Anytime you start a new exercise or area in managerial accounting, it will involve a particular way of thinking about costs. And in costing, the way in which we think about costs is based on their directness, based on whether they are direct or indirect costs. Okay? So anytime you are tasked with costing a product or service, and costing a product or service simply means estimating the cost of making 1 unit of that product or service. Okay? Your mind immediately needs to go in the direction of visualizing all the costs that might be associated with that product, and then immediately sorting them out into direct and indirect. Do you remember in the second week of class, we picked an example, a cup of coffee made in the bistro downstairs. And I asked you guys to describe various types of costs that might be related to the making of that coffee, and then we classified those costs into some direct and some indirect. Do you remember this exercise? So that is the way your mind needs to work. You immediately need to start visualizing all the costs that might be related, and also to start sorting them out into direct and indirect costs. Now, what do you do with all the direct costs that are relevant to your cost object? Well, you simply identify them and you match them up to the right cost object. That's all you need to do. You don't actually need to implement any arithmetic with the direct costs. You simply add them all up and you put them in one place. You identify them with the relevant cost object that they come from. This process is what we call cost tracing. Okay, in a classroom setting, cost tracing tends to be very simple and very straightforward. But when you're actually doing it in a manufacturing facility, we'll talk about some of the things that you have to do. Now, once you have dealt with all the direct costs, your mind needs to move on to the indirect costs. Now, the indirect costs are naturally more complex, more complicated to deal with, right? Why? What makes the indirect costs more complicated to deal with while you are costing products and services? Yes, because the indirect costs are incurred sort of in a lump sum, right? And they're shared jointly across many different cost objects. But can you cost many different cost objects jointly? No, you have to cost each cost object independently, right? Individually, because you price individual products and services. Right? You don't price groups of products and services. So you need to find a way to take each indirect cost and split it up and allocate one portion to each cost object. You need to do that in some reasonable way, such that those allocated numbers you come up with make sense, so you can justify them to someone else. Okay, and that process of taking indirect costs and figuring out a way to split them up and give one share to each cost object that incurs, it is called cost allocation. It's just the process of arithmetic that you go through in order to split up indirect costs. So you trace all your direct costs, you allocate all your indirect costs, and then you add up the direct and the indirect costs, and you're pretty much done. Now, one more distinction you need to make before you actually jump into any costing exercise is, are you doing job costing or are you doing process costing? Okay? Does anyone remember, can they describe to us the difference between job costing scenario and a process costing scenario? A bottling company, okay. Like an auto shop and bottling company. These are two good examples to have in mind when you're trying to keep that distinction clear for yourself. Process costing is employed in enterprises where some kind of automated or mechanized process produces many hundreds of thousands of units of an identical product. It's like a Pepsi factory or a Coke factory. Every bottle of Pepsi that comes out of the assembly line is going to be identical to every other bottle within that brand, right? So it's going to consume an identical amount of resources. So you don't need to cost each piece separately. You just cost that entire brand as a whole, and then you divide those total costs by the number of bottles that come out of that assembly line, and that gives you a cost per unit. So in process costing, the costs per unit that you come up with are averages. Keep that in mind. Okay, they're total divided by volume. In a job costing scenario, on the other hand, is one where every individual piece of the cost object is unique or distinctive. Okay, like a mechanic's shop. Every car that comes in to be repaired is going to require some slightly different work done on it. Right? So it's going to require a unique combination of your resources, so it has to be costed separately. So there's no identical units that you can smush together and just cost at one go. Okay? So whether you are doing job costing or doing process costing depends on the kind of business you're involved in, the kinds of products and services that you deliver. Typically, service enterprises tend to be a little bit more job costing because most services tend to be somewhat tailored or somewhat customized to what the customer wants. Right? Like so, audit firms are service enterprises. For an audit firm, every individual audit is going to have to be costed separately because each individual audit is going to require different combination of skills. If you're auditing a bank, you might need somebody with expertise in banking law and banking regulations. If you're auditing a manufacturing enterprise, you might need someone with expertise in cost accounting and managerial accounting. Okay, so every audit is going to require a unique combination of resources, so you have to cost that separately because you don't roll audits off an assembly line. Each audit is not identical to every other audit. Similarly, if you were a legal firm, right, every case that your lawyers are arguing is also going to have to be costed separately as an independent job because each case is going to require different types of people, different amounts of their time, and so on. So typically many service enterprises tend to have job costing. So first you have to decide in your mind what kind of scenario are you in, and that's going to dictate the kind of math you do. But the logic is exactly the same. Regardless of whether you're doing job or process costing, you trace all your direct costs and then you allocate all your indirect costs. Okay? So we'll go through the mini case from your textbook. This is called the Robinson Company. Okay? So if you will turn to page 4, I put down there the major facts. Okay, and then once we step through this, any questions that you have about this whole process will hopefully answer themselves. Okay, so this is the Robinson Company. They manufacture and install specialized machinery for the paper making industry. Now, to make a machine, Robinson buys some components from outside and makes other components itself. Each of Robinson's jobs has a service element also. It has to install the machine at the customer site, ensure that it meets expectations, and so on. Okay? So does this sound to you like a job costing type of business or a process costing type of business? It is a job costing scenario for multiple reasons. Well, first of all, you're told that they install specialized machinery. Okay, so the very word specialized should indicate you that it is likely to be something unique for every customer. Okay, so that automatically suggests job costing rather than process costing. The other thing that is important is that each of the jobs has a service element. There are people going on site and doing different things in order to help that machine get set up and running. And what they have to do is also going to depend on what the customer's needs are. Right, so again, there's another element of sort of customization or specialization for each customer. So both of those things suggest that this is a job costing scenario. So your textbook likes to describe this as a 7-step process. That's overstating the case a little bit. It's actually only just 2 steps. Okay, but let's just go through what they describe as the 7 steps for us to be consistent, so that you can go home and reinforce with the textbook. So the very first step would be to identify the job. Okay, so the job that we are trying to cost in this case is the manufacture and installation of a small pulp making machine for the Western Pulp and Paper Company. This job is code named WPP 298. So the job that we're trying to cost is the WPP 298. And the second thing that you would do is to identify and trace all the direct costs of the job. So remember what we discussed. First, deal with all the direct costs. Trace all the direct costs. Okay? Okay, so now here's an important distinction for you to keep in mind. In a classroom situation, you will just be given all the direct costs that are relevant. And all you have to do is identify each direct cost, match it up with the right cost object, and just add all of the direct costs up once you've matched that. That's all you have to do. Okay? But put yourself in the shoes of the cost accountant at Robinson Company. Now, imagine that you were the cost accountant and you were actually doing this in real time, on the job. How would you go about identifying and tracing all the direct costs that relate to this particular job? Keep in mind that you have many jobs going on at the same time. many different types of direct costs, materials, labor, supplies, etc. And the information is going to be all over the place. So how will you actually compile all the information and trace all the direct costs, attach them to the right cost objects? Where would you go and look? What would you do to get hold of the information? But specifically, there is what we call a paper trail for every transaction that you make. If any of you want to become auditors in the future, your life will be all about following the paper trails. Okay? So in any enterprise, there are hundreds of different types of transactions that happen every day, right? Purchases, sales, getting loans, giving credit, and all of that. But every single transaction has its own paper trail. So suppose you're making purchases from your suppliers, you initially send out a request for a quotation, and then that will be followed up by a quotation from their side. And then once you finalize the quotation that you want to accept, you generate something called a purchase order. And then they'll actually send you the goods, and then they'll send you an invoice. Okay? And then once you have the invoice, you pay, and then once the goods come, or maybe you pay after the goods come. Once the goods come, you'll find a delivery receipt that says we have taken delivery. You've given it to us, you've inspected it, and all of that. And then once the invoices come, you'll send the payment, and you get a receipt. So even a small transaction like that, buying some material from your supplier, is generating a huge paper trail. Then there are hundreds of each type of transaction. So there will be hundreds of each type of document. Okay, so your life as an accountant really is only a very small percentage of it is going to be actually making accounting entries, making the debits and credits that you learned last semester in financial accounting. The vast majority of it will be keeping track of and organizing all of this paper trail. Okay, so basically what you will do is you will go to your paper trail and you will look at all the documents that relate to your costs. Okay, so in Robinson's case, we've identified two categories of direct costs. There are direct material costs and direct labor costs. And how do you know these categories? Well, you know them because you know the business. Okay, once you've been in a business for a certain amount of time, you figure out what the relevant costs are of materials and labor. Okay, so now we want to find information about what are the direct material costs that are relevant to this particular job. So you will go to either your purchase orders for the material, okay, or an even better document to go to is something called a materials requisition. So imagine that all the material that you order for this job and for all the other jobs has come in, has been received, paid for, receipted, and it's stored in some kind of central warehouse. Okay, and the workmen, as they're working on different jobs, will have a need for this type of material, for that type of accessory, and so on. So then they'll go into the warehouse or into the inventory stocking area, and they're going to make a requisition. That means a request to take out a certain amount of material from the warehouse. So every time a certain amount of material is sent away for a particular job, there will be a requisition that states that, okay, this person who's in charge of this job requested this material and was given it. So we'll go through all of the requisitions, sort them out by job, and then end up with a bunch of requisitions that are relevant to our particular job. And then you add up the value of all the materials that were sent out in those requisitions, and that's how you identify the direct material cost. Okay? So what we do here in the classroom is just a given. You just add them up and then you attach them to the right cost object, but in reality you have to go through all of these steps in order to come up with that number. Similarly, if you were trying to identify the direct labor costs, okay, you would go to a different kind of documentation, a different kind of paper trail. Now, what kinds of documents exist that will help you calculate labor costs? Yes, I thought you had your hand up. Everybody is familiar with timesheets, right? Most of you have had jobs before and you all clock in timesheets. And the reason you do that, well, one reason is control. You want to make sure that everybody is doing what they were contracted to do. But the other reason is so that you can keep your cost accounting straightened out. So you will go to all the timesheets and then you'll compile all the timesheets by job and then add up the hours worked and then multiply it by a certain contracted rate for the hour. Right, so the factory worker might be contracted for say $8 an hour, the supervisors for $20 an hour, and so on. So that's how you arrive at those numbers. Okay, so there's a lot of sorting through documents and paper trails. Now, if you were an auditor, this is not relevant to what we're doing here, but it's important for you to know. If you are an auditor, if you decide to specialize in financial accounting and then take the CPA exam, go to work for an accounting firm and become an auditor, what you will do is go into other companies and make sure that their accounting is working, all right. Make sure that their financial statements have the right numbers, there are no errors, there's no fraud and all that, right? So how do you think you do that? What is the actual process of checking to make sure that there isn't any error or fraud? You would check their books, but so when we think about it from the outside, we imagine it is actually a book where all of these accounting transactions are written up. There isn't. Okay, so the book is kind of a notional term that we use to refer to all of these documents that I just described. So there isn't actually one single book where all the accounting transactions are written out. There are hundreds or thousands of different types of documents. Material requisitions, invoices, purchase orders, timesheets, bank statements, and so on. Okay, there are hundreds of different types of documents. And let's suppose you are auditing sales. You're looking at that sales revenue number, you're trying to audit it, figure out if it's right. What you'll do is you'll go to a number of invoices. So there'll be, let's say, 1 million or so invoices that the firm has generated over the course of its 1 year worth of transactions. You will randomly sample, let's say, 100 of those invoices. Okay, and then you'll take each invoice, and then you'll call up the person to whom the invoice was made out, and you'll ask them, did this company actually make a sale to you? Okay, and that person verifies, says yes, so then you take that off, and then you go to the next one. Okay, and this is exactly the kind of work that you guys will be doing when you intern at accounting firms. Okay, so that's how you go about verifying each number. If you want to verify the cost of goods sold, well, then that relates to costs, right? So you will go to your requisition documents, your purchase orders, and all that. You'll go in the sample, let's say 50 purchase orders, call up the supplier, and ask them, was this really the price? Did this transaction actually happen? Okay, and if everyone verifies everything, checks off check, then you verify that number and you move on to the next. So in accounting, everything works around paper trails, both in managerial as well as in financial.
When they check the whole check if this actually happens, do they always I mean, what do they do with people that they call take that
Yes, it does, and there's several other situations that happen, but this is not an auditing class, right? So we don't want to spend a lot of time talking about that. There is an acceptable rate of error for every type of transaction that you're trying to sample, and if the ones that you are verifying do not verify exactly for more than that acceptable rate of error, you have an acceptable rate of error. Let's say 5% of the calls that we make may not work out on average just because the other person doesn't remember or whatever it is, normal rate of error. But if it turns out that say 10% of the customers or 7% of the customers don't verify, well then what you'll do is you'll increase your checking of that line. You will sample more. You'll sample another 2,000. Okay, so that's how auditing works. Just to give you a brief idea. So here in Robinson's case, they have done all of this that we just described, and they have identified direct materials costs as being this amount and direct labor costs as being this amount. Okay? So now we have done the cost tracing. Okay, we haven't actually done it, but I hope you can all visualize how one might trace costs in a manufacturing facility. Okay? So now that we are done with dealing with the direct costs, we have to move on to our indirect costs. Okay? Now, keep in mind what we need to do with our indirect costs. We have to allocate our indirect costs. Okay? So first you'll do the same thing. You'll go back to your paper trail, you'll go back to all your documents, and then you will compile a list of all the indirect costs that are relevant to this particular cost object. Okay? So in Robinson's case, they've come up with, they don't give you a comprehensive list, but they've come up with a few, so we'll work with that. So the indirect costs include things like salaries of supervisors, repair maintenance, and then rent, electricity, and utilities. Okay. Now, when we talked about indirect costs last class, we introduced a couple of new terms. Anyone remember what they are? You can describe to us what they were. Allocation base and allocation rate. Rings a bell? Okay. So you all agree that we need to allocate all of these indirect costs, right? You don't know what each of them is a number, but you do know that each of these costs you cannot identify entirely with our particular job, because these costs are shared out across this job as well as many other jobs. So whatever these numbers might be, you need to find out a way to split them up, right? You need to find some proportion in which you can split them up and then allocate one small piece to this particular job. Okay? So now, in order to do that splitting, what do you need to decide? What is it that you need to decide, or what is it that you need to identify? Think about the BMW example where we used the indirect cost of rent. We split up that rent in some proportion, right, and across the X5, the X6, and the X7. But before we actually did the splitting and came up with the numbers 400, 400, 200, or whatever it is, what decision did we make about how we were going to allocate? We decided the allocation base that we were going to use, right? We discussed a number of potential allocation bases. Remember this? Somebody suggested space, somebody else suggested production volume, someone else suggested the number of hours, the number of machine hours, or the number of labor hours. So this is these are many potential candidates for allocation base. So you first need to decide what allocation base you are going to use to allocate each of your indirect costs. And how do you go about choosing an allocation base? How do you choose an allocation base? How do you choose an allocation base? There's no need to refer to your notes, just answer using common sense. How do you choose an allocation base? So when you were allocating rent, take that as an example, okay? What were you thinking of when you suggested space or production volume or hours as an allocation base? What is it that made you think that those were reasonable choices? What you want, what you're looking for when you choose an allocation base is you want something that's going to reflect the way in which that cost is actually incurred, right? So rent, for example, is a cost for space. So the more space you occupy in total, the larger your rent is going to be. Everyone agrees on that? The less space you occupy in total, the lower your rent is going to be. So space is kind of like what's driving this overhead that we're calling rent. Just like the number of hours for which you run your machines might be what's driving your electricity bill or your utility bill, right? Because the larger the number of hours by which you run your machine, the larger the total cost is going to be and smaller. Therefore, it makes sense for you to take that rent that you're paying, that lump sum, that single number, and to split it up across the three cost objects in the same proportion as the space that those three cost objects are using up, right? This is exactly the same logic that you would follow if you were, let's say, occupying an apartment, sharing it with a flatmate, and you guys are unequal sized rooms and you're trying to figure out how to split the rent, right? Or you're sharing any kind of resource, right? So this is so the space here, for example, is a resource that's shared across three different entities that we're calling cost objects. So really, to figure out exactly how to share it out, you just look at in what proportion is each of those cost objects using up this resource. Now you have to find a way to measure that, and we are going to measure that proportion using space measured in square footage. Okay, so that process is called deciding an allocation base. Now you have to decide your allocation base using a combination of intuition, understanding of how the business works, and if these two are not sufficient to suggest one allocation base as being really good, then you also rely on some statistics. Okay? So how you would go about it is you would go through each of these overheads and you would decide what base am I going to use to allocate each of these overheads. Okay? Now in an ideal situation, so let's think about bases for each of these. Okay, the salaries of the supervisor. Now what allocation base would you pick to allocate salaries of supervisors? Imagine that there are 5 jobs, of which this is one, and your supervisor is running around supervising all 5 jobs, but he's paid a single salary at the end of the month. And what we have to do really is find out a sensible way to split that cost up into 5 components and give one component to each job. So what base would you pick for that? Jennifer? The number of hours that he spent on each job, right? That would be a reasonable way on which to allocate. Now, suppose you don't have that data, okay? Because someone in a managerial position might not fill out detailed timesheets, right? They might just show up wherever it is that they're required and do whatever troubleshooting they're required to do. So suppose you don't have that data, you might use something simpler like the number of hours that the laborers put into each job. Now, suppose this job took up 1,000 hours of your worker's time, and all the other jobs combined took only another 1,000 hours. Then you would give this job, you would allocate to this job 50% of the salary of the supervisor. Because you're using this rough logic that the more hours the laborers put into a job, well, naturally the more hours the supervisor is also going to have to put into supervising them. You understand the thinking process that's going on here? Okay, so maybe the number of labor hours, the number of machine hours, something like that. How about repair and maintenance? So this is again the salaries. Let's suppose this is the salaries paid to your repair and maintenance team. Okay? So again, they are not contracted to work only on some specific job, but they're going to go around and keep troubleshooting as and when they're required to troubleshoot on any maintenance or any equipment. So again, you might use some rough measure of activity like the number of labor hours that your workers put into each job. Because if a particular job took up very many hours of your workers, well then it's more demanding, it's more complex, that's what it means. Right? And so chances are your repair and maintenance team also put in more of their time, more of their energy into that particular job. Okay? Rent, we've talked about this before. Right? You could allocate based on space. Electricity and utilities. Sorry? The amount of usage of what? These are all measures of usage. Of course, usage of what? Yes? By definition, yes, right? Electricity is power, right? So what is the resource? What is the resource that's being used here? Yeah. How do you measure it? The number of hours for which you run your machine, right? So if this particular job has used up, let's say your machines have run for 500 hours on this job, and your machine has run for say 100 hours on the second job, and then you're going to split up the electricity cost in the ratio 5:1, because that's what makes sense. Right? So you need to come up with some measure of resource usage and a way to measure that resource usage and then attach that to each indirect cost. And then use that as the allocation base, use that as the base by which you're going to split up each of these costs. So that's the first thing you have to do, choose an allocation base. Okay? Now ideally, if we were doing this by the book, we would pick a different allocation base for each of these because we just talked about this. We came up with different conclusions for what would be a good base for each of these. But in reality, you often find that, this is particularly the case about 20 years ago, that when you actually implement a costing system on the ground, people want to do simple methods. Okay? So what Robinson is going to do here is they're going to just club all of these indirect costs together into one big pool, and they're going to allocate all of these costs using direct labor hours. Okay? So direct labor hours means the number of hours that your direct workers, that your factory floor workers put into each job. So all of these is going to be allocated using direct labor hours as a base, so a common allocation base. Now, you're probably thinking to yourself, direct labor hours is a decent allocation base, let's say for salaries, also for repair, but maybe not such a good allocation base for rent, right? Right? So you create a little bit of inaccuracy, but there's always a trade-off between simplicity and accuracy. If you want a simple system, sometimes you give up a little bit of accuracy. If you want an accurate system, you give up a little bit of simplicity. In this case, they decided to go in for a simple system. Okay? What we do in chapter 5 is we look at when people do use a simple costing system, what are the consequences of that, what are some of the inaccuracies that get created, and how do you fix them. Okay? So right now I'm going to do what's colloquially referred to as simple costing. So just pool all of your overheads together into one big pool and use one common allocation base. Okay? So direct labor hours is what they say. And let's see what information you are given. So in 2006, you were told that the total direct labor hours was 27,000. Okay? So understand what this information means. This means that in total, in that year, all the jobs that Robinson worked on together consumed 27,000 of your direct labor hours. Okay? Now, you've already done, right? You simply identify all the indirect costs that you're going to allocate using this base. That's all of these that we wrote down here. And so you're told that your total indirect costs for that year amounted to 1,215,000. So these are the total of all of your indirect costs under these various categories. Okay, so this is what you need to allocate. And this information is what you're going to use in order to allocate those indirect costs. So what do you do with this information and this information? You have a total of 1,215,000 in overhead, and you're going to allocate that overhead to your various jobs using direct labor hours as an allocation base. Okay? And you were told that in total, across all the jobs, 27,000 direct labor hours were worked. So how can you combine those two pieces of information, and what can you compute? Okay. Now what does that division give you? So you worked a total of 1,215,000. That's your total overhead. You're going to allocate it using direct labor hours, but you worked a total of 27,000 direct labor hours. So you divide that number by this number, and that, can someone compute this and tell me what it is? And you get this information, which is very crucial. What does this information mean? This means that on average, for every direct labor hour worked, you spent $45 in overhead. Okay? And this is what we call your overhead allocation rate. Any questions about this step? This is the equivalent to what we did last class in the BMW example, where we said, okay, you have $1 million in rent. The total space available in the warehouse is some 50,000 square feet. So your average cost per square foot is $1 million divided by 50,000, or $20 per square foot. You all remember this step, right? That is how you compute your allocation rate, and that's exactly what we're doing here. So now we know that for every direct labor hour spent on any of your jobs, on average, you expended $45 in overhead. Okay? So now, how do you use this information to identify the overheads that should be allocated to your job? What do you need to do now? How do you use this information to identify the overheads that should be allocated to our particular job? Because that's what we care about here. That's correct. You first figure out how many direct labor hours did I put, not in total, but into this job, right? So suppose you put 1,000 direct labor hours into this job. Let's suppose, hypothetically. Okay? Then you're going to do the following. Well, on average, I spent $45 in overheads on each direct labor hour. So if I put 1,000 direct labor hours into this job, well, then I should allocate to that job 1,000 times 45 or $45,000 of overhead. Okay? That is the process of allocation. So let's look at the information that you're given here. How many direct labor hours did this particular job use? How many direct labor hours did our job use? Sorry? 88, right? So since it used 88 direct labor hours, the overhead allocated to our job is going to be 88 hours times the average overhead rate of $45 an hour, which is going to give you 39.60. And so this is the overhead that you have allocated to the WPP 298 job. Okay? Any questions about this? Now there's another way in which you can think about it. You don't have to do all of the math in this particular way. You can just do the following. We worked a total of 27,000 direct labor hours, right? Out of which 88 were towards the job that we're interested in. So our job used up this proportion or this percentage of the total direct labor hours, right? Can someone compute what this proportion is, please? Just read it out for me, please. Again, please. More significant digits, please. Yes. Yeah, that's enough. So we used up some minuscule proportion of the total direct labor hours, right? Whatever this is. And therefore, our job should be allocated the same proportion of the total overhead that we spent. Okay? And if you do the math, you'll find out that you get the same answer because it's the same. It's the same math. Okay? Any questions about this? Okay, so are we done now with estimating the cost of the WPP job? Are we done now? What do we need to do? Yes, you need to add everything up together, okay? So this is a step that everyone always forgets. You do all of the work to estimate the overheads allocated, but then you forget to add it back to the direct cost. So the total cost of the 298 job are going to be the sum of the direct labor, the direct material, and the overhead. Okay, so it works out to some 10,000, some approximate number. Okay, and that's your cost estimate. What is it? What is the okay? So this is your estimate of the total cost. Now, suppose we had more overheads. And instead of allocating all the overheads using a common base, suppose we group the overheads into two pools and picked a different allocation base for each pool. Suppose we had pool 1 and pool 2. So pool 1 overheads we decide to allocate using, let's say, direct labor hours, like we did here. And all overheads in pool 2 we decide to allocate using space. Okay? Suppose that was the case. We have two cost pools and two allocation bases, one for each of those pools. How will this process change? How will this process change? I'm going to repeat the question, and this time I'd like everyone to pay attention. Okay? Suppose instead of allocating all your overhead using a common base, like we did here, we split the overheads up into two buckets or two pools. The first pool of overheads we decide to allocate using labor hours. The second pool of overheads we decide to allocate using something else like space, okay, square footage. How will this process change? Sorry? But specifically how? It won't be substantially more complicated. It's just one extra step. Okay. Instead of how many hours? Are you quite sure about that? I'm going to repeat the question. Instead of having just one pool and having one allocation base attached to that pool, let's suppose we split these overheads up into two pools. You understand what that means, right? Just make two groups and have a different allocation base for each group. Okay? Aisha? I'm not quite sure I understand. Basically, you would have to repeat what we did here twice. You have to compute an allocation rate for the first pool using direct labor hours, allocate using the number of direct labor hours actually used by the job, and then you circle back and then you work on the second pool. Compute an allocation rate for the second pool, and that allocation rate will be a certain number of dollars per square foot. Okay? And then allocate that cost using the number of square feet used by this particular job. Okay, so basically whatever it is that we did here, you will have to repeat once for each cost pool that you have. Okay?
So that more information will be given, right?
Of course, you wouldn't have to make it up yourself. Okay? So you have to do the allocation process as many times as you have cost pools. If you have, let's say, 3 cost pools, each of which has a different allocation base, you have to compute the allocation rate and then do the allocation 3 times. 1 time with each cost pool and with each base. And then add all of those numbers up, add them back to the direct cost, and you have your cost estimate. Okay? So make sure you go back home and review this so that you don't forget, and write down any questions that you may have. When we come back on next Thursday, which is the first day after your test, we'll do a quick review of this again. Okay? But we want to be up to speed on it in a few minutes so that we can move on to the rest of the stuff that we need to talk about in costing. Okay? So let's do your exam review now. Okay. Yes. So some basic facts. I sent out an email on Tuesday. I hope you all check your Rutgers email. Okay. If you don't, then I can't be responsible for you not being informed, because I have no other way of informing you about stuff. I sent out an email listing everything you need to know about the exam. I also created a new folder on course documents. It's called Midterm 1, that holds your sample exam. I see that many of you have downloaded it. I also put on there an FAQ about the exam. When is it? It's on Tuesday. It's going to last for the whole hour and 20 minutes of class. It's going to be a combination of multiple choice and longer questions. In the multiple choice questions, I gave you a sample, a few examples for you to get an idea. The longer questions will be similar to what's on your homework, so you already know the level and the kind of questions. It is a closed books and closed notes exam, but you are allowed to bring a cheat sheet, and everything that you want to know about the cheat sheet is on the FAQ, okay? The size, how long can it be? Are there any questions that weren't answered on there? And then what else? If you are unable to make it to the exam, you have to let me know as soon as possible. I hope that won't be the case with any of you. There is a scheduled makeup date already, so please be aware of all that stuff. Okay? You have to bring a calculator with you on the day of the exam. I don't have any extras that I can give out, and I will not let you use your phones because I'm not allowed to by school policy. Okay? Okay. So let's look at chapter 2 for a moment with the relevant range question. Okay, so this is sweet candies. Okay, and oh, I don't have access to the textbook questions. So okay, so sweet has a few categories of fixed and variable costs. Okay, okay, I'd like your full attention, please. This is for you, not for me. There's a few categories of fixed and variable costs. So the primary fixed cost is there's rent, it's $1,200 a month. Right? I hope you all realize that was a fixed cost. And then they have this machine that's depreciated using straight line depreciation over 10 years. And the original cost of that machine was $9,000. Okay, so is depreciation a fixed or a variable cost? It's a fixed cost because it's just simply computed based on the original purchase price of the machine. It is not a function of your activity, your production level, sales level, or any of that stuff. Okay, what the machine costs $9,000 and is depreciated using straight line over 10 years, assuming zero residual value. So what is the annual depreciation? Yeah, just 900. Okay, so those are all your fixed costs for the first year. Your variable cost is the material cost. Materials cost 30 cents per job breaker. You simply compute the number of job breakers you make that year and multiply it by 30 cents, and you have the total material cost. Material cost is a classic variable cost because it's quoted as a certain number of cents per candy, right? Now, what is the current annual relevant range? Now, this is the interesting question here. Okay, so how do you go about determining the relevant range? Here's what you first, I'll give you a sort of standardized general idea. You first need to determine what is the current range of demand within which you are operating. Okay, so currently your demand is 3,800 job breakers per month. So if you want to convert that to annual numbers, that's going to be job breakers per year. We only are doing everything in year in terms of annual data because the question asks you for annual data. So convert all the monthly data into annual data. Okay, so this is the current level of output. Okay, now what are your fixed costs at this current level of output? Your fixed costs at this current level of output are the depreciation, right? And then your rent. Your rent is going to be $1,200 per month. Okay, so $1,200 per month is 1,200 times 12, which is some 14,400. So this is the total fixed cost at this particular level of production. Everyone's clear about this, right? Okay, so now how you go about figuring out your relevant range? Do a graph always. It is my suggestion. Okay, put the activity level on the x-axis, and here the activity is the number of job breakers that you're making, and put the fixed cost on the y-axis. Okay. Now, what is your current activity level? 45,600 job breakers, right? And at that current activity level, your total fixed cost is 15,300, right? So 15,300. Okay. Now, what you need to ask yourself is, for what range of activity is the total fixed cost going to remain at 15,300? For what range of activity is that total fixed cost going to remain 15,300? So let's do it in two steps. Let's first move to the left of this activity level and then move to the right. Okay. So let's suppose you produce something less than 45,600. Let's say 20,000 or 10,000 job breakers. Is your fixed cost going to remain 15,300? It is, because your rent is going to stay the same, your depreciation is going to stay the same. In fact, all the way down to this point, it's going to stay. Okay. Now let's move to the right. Okay. Up to what level of activity is your fixed cost going to stay at 15,300? we are moving to the right to 45,600, okay? So to the right of 45,600, up to what level of activity is your fixed cost going to remain 15,300? 49,200, and tell us how you determine that. Yeah. Right. So the total capacity of the machine is 4,100 candies per month, right? It just so happens that the machine is currently producing 3,800, but it can produce up to 4,100. So that is the total capacity. So up to 4,100 candies per month, which is 4,100 times 12, which is 49,200 candies per year. What is going to stay fixed? Your depreciation on that machine is going to stay fixed, right? Your rent, you can assume, is always going to stay fixed, okay, because you're not told to assume that you need another space or anything. So your total fixed cost is going to stay fixed up to that 49,200. Now what happens to the right of this? What happens when you move beyond 49? You need another machine, so your depreciation is going to double, right? So then after that point, your total fixed cost is going to be this plus another 900. Let's assume that you buy another machine for the same price and so on, just to keep the numbers simple. Everything's going to jump to 16,200 until what? Until maybe 98,400, right? So right now you are operating here, right? So that means your relevant range is this. 0 to 49,200. That is your relevant range. Okay? Now, next year, you will move to what level of production? Next year, you are told that demand will double. So next year, you are going to move to 45,600 times 2, which is 91,200. Okay? So next year, you're going to be operating somewhere here. So next year, what is your relevant range? Your relevant range is now this, 49,200 to 98,400. That's the range within which you're sticking. Okay, so that's how you determine the relevant range. First, identify where you're at, graph what the fixed cost is at that point, and then ask yourself, go to the left, go to the right, and keep drawing a line until the fixed cost changes. The point at which the fixed cost changes from what it is right now at your level is the point where the relevant range ends. Okay? Okay. Let's not talk about that right now. This is about the conceptual idea of the relevant range. You would lose some points, but if you understood the concept of the relevant range, you would get some points for that. Okay. Any questions about this? This is clear now to everyone, right? Okay. So let's talk about the income tax stuff. So this was question 321, right? Brook Motors. Okay. Now, there's a number of pieces of data that you need to deal with. So Brook Motors sells a car for 27,000. So your selling price is 27,000 per car. It purchases the car from the manufacturer for 23,000 each. So that is a variable cost. Okay. Each month it pays 48,200 in rent and utilities. 68,000 for salespeople's salaries, also fixed. In addition to salary, salespeople are paid a commission of 600. Variable cost, right? Because 600 per car. Also spends 13,000 each month for local advertisements. Also fixed cost, right? Certain amount per month. Tax rate is 40%. Okay. How many cars do you need to sell to break even? Yes, question? What is it applied to? What is the tax rate applied to? Operating income. Your revenues minus all your operating costs, variable costs and fixed costs, gives you what we call operating income. Okay? And then your taxes are applied to your operating income. So your operating income minus the tax portion gives you what we call net income. Okay? Alright, so you determine the break-even point. I'm sure you guys know how to do that. So let's look at 2, because that's the part that's affected by taxes. They have a target monthly net income of 51,000. Target net income of 51,000. Okay. So let me put what I said down so that everyone is comfortable with it. So revenues minus all your operating costs. By operating costs, we mean costs that you need to incur in order to run the business. Okay, that gives you what we've been calling operating income until now. Now, operating income minus your tax rate percentage of that gives you what we call net income. Okay, so now Brook Motors wants a net income of 51,000, and we know that the tax rate in this case is 40%. So you need to make some operating income out of which you pay 40% in taxes, and the end result of that, after taking out the tax portion, has got to be equal to 51,000. So you simplify this just works out to 60% of operating income has got to be 51,000. So really the operating income that you are shooting for is 51,000 divided by 60%, which is some 100,000 or whatever, approximately. Okay? Now, what do you do with that 100,000 or whatever number you get? I'm sorry, you guys were the ones that asked the question, right? So, does this answer your question, or do I have to keep going until the end? Okay. So, once you come up with this number, whatever it is, what is it? Then you take it and you plug it back into this here. So now you know you need an operating income of 85,000. So how many cars do you need to sell to get to that? Well, suppose you need to sell X cars, so 27,000 X minus 23,600 X minus all those fixed costs, whatever they are, and then you solve and you take it out. So basically taxes add one extra step to the process. Okay, and your taxes are always taken out of operating income. And then there was a question about 324. Okay, 324 is difficult unless you make one particular realization, and once you make that realization, it becomes somewhat trivial. Someone visited my office hours, and then when I told him what he had to do, he said, "Oh, this is a trivial question," and left. Okay? So, all you have to do is read the first sentence carefully. Suppose Doral Corp's break-even point is revenues of 1.1 million. Okay, what does that mean? That means break-even revenues are 1.1 million. What is break-even revenues? Revenues at the break-even point. Okay? So at the break-even point, what do you know about operating income? 0. So what do you know about revenues? Yes. Have to equal total costs, total variable costs plus total fixed costs. Right? So you know that this has got to be equal to total variable costs and total fixed costs, right? Because that's the break-even point. So this is given information now, and your fixed costs are 660,000. So now you know what your variable costs are, right? You just subtract. So you know that your variable costs are 440,000. And all that you get just by reading the first two lines. You have all that information. Compute the contribution margin percentage. You can do that. Contribution margin divided by revenue. Right? You have all the information you need now. Compute the selling price. That's the second part, is the one that trips most people up. Compute the selling price, the variable costs per unit are 16. Will someone tell us how to work through this? But X is what? I don't have X anywhere on the board. That's what you need to figure out. So that's X. Okay? Yes. Correct. Precisely. So after that point, it's just arithmetic, right? You know the total variable cost of 440,000, but you also know that each unit incurred variable cost is 16. So if you take the 440,000 and divide it by 16, that gives you the number of units. Thank you. That's how many units you sold, right? Because this is total costs, this is cost per unit. Now then you take this and you divide break-even revenues by the number of units, and then you get the selling price per unit. So it's just arithmetic, just rearranging numbers. Okay? Exam, the sample exam. A couple of questions that I want to go over. Question 6. I hope some of you at least have printed versions of the exam so you can follow. Okay, so question 6. Let's talk about it for a moment. Okay. When you make 10,000 units, the fixed costs are 14 per unit. Therefore, when you make 20,000 units, fixed costs will do what? Yes. It will remain at 14 per unit. Who agrees, who disagrees? You agree or disagree? You disagree because the fixed cost should be 7 per unit. Okay? Why? Because if you say that your fixed costs remain at 14 per unit, what are your total fixed costs then? 14 per unit times 20,000 units, which is 280,000, whereas before your total fixed costs were 140,000. So that's not how a fixed cost should behave. When 10,000 units are produced, your average fixed costs are 14. So that means your total fixed costs are 140,000. That is the number that will stay fixed or constant. So when you make 20,000 units, your average fixed costs are going to go down to $140,000 divided by 20,000 or 7 per unit. Okay? Remember, fixed costs stay fixed in total, never on a per unit basis. On a per unit basis, you keep producing more, your fixed costs per unit will keep going down because of economies of scale. So don't get fooled by this. Similar question axle and wheel. Okay? Axle and wheel. So axle and wheel makes 1,000 axles a month. And here are the per unit data. So again, these are all costs per unit. Okay? So direct materials cost 30 per unit, labor is 5 per unit, variable overhead is 10 per unit, and fixed overhead is 40 per unit. Okay? So the plant has a capacity for 2,000 axles and is considering expanding to 1,500. So right now you're only working at 50% of your total capacity, making 1,000 out of a potential 2,000. Now you're thinking of expanding to 75% of your total capacity, going up to 1,500. Okay, what is the total cost of reducing that 1,500? This is just a small variation on the example that we did in class with the speaker systems. Suppose you were making 1,500 axles. Your total direct materials cost would be, what, 1,500 times 30, right? Because that's a variable cost. The direct labor would be times 5. Your variable overhead would be 1,500 times, what is it? 10. How about your fixed overhead? Yes, you can do that. I don't want to do that because then half the class will ask me later where that number comes from. The total fixed overhead is 40,000. Okay? It is not 1,500 times 40. No. It's not 1,500 times 40 because if you did that, you would be treating the fixed cost as though it were a variable cost. So don't do that. Your fixed cost is 40,000. And you know that your fixed cost is not going to increase. You know that your relevant range for the fixed cost is not going to change because if you move out of one range into another range, your fixed cost will change, right? But in this example, you know that you're going to stay within the same range for your fixed costs. How do you know that? Yes. That is right, because your total capacity is 2,000. You're not yet up to that capacity. Okay, so as long as you're within 2,000, you're in the same range. Your fixed costs will always be the same. So that's how you estimate that. There was one other question, right? You had that other question. Or 12. This is the one, right? So anyone want to walk us through this question? Someone want to walk us through it? Someone knows how to do it? Again, it's algebra. Okay, so let's put down all the information that we have. The contribution margin ratio is 0.3. Now, how is contribution margin ratio defined? Contribution margin divided by sales revenue. So that's 0.3, right? So in other words, your contribution margin is 30% of revenue. Okay, so that's what we know from the first sentence. Target net income is 76,800 and targeted sales volume is 480,000. Now this is a little bit trickily worded because it says your sales volume in dollars is 480,000. What that really means is that your sales revenue is 480,000. Okay? So your sales revenue is 480,000. No, cannot be interchangeable, but you're told that this is your sales volume expressed in dollars. How can you express volume in dollars unless you take the volume multiplied into the selling price per unit and come up with the revenue? Okay? So your contribution margin is 144? No. What is it? 144,000. So you have figured all of that out from those first two lines. And what else do you know? You have one piece of information that we haven't used. Net income is 76,800. Okay? So this is what we know. So you have income, you have contribution margin, and what are you asked to figure out? Fixed cost. You know how to do that, right? It's just the difference between the two. Okay. So if you don't know how, there isn't a particular procedure to answer each different type of question, right? Because the questions can come in many different variations. So first, write down everything that you're told, and start rearranging it and seeing what information you can get out of rearranging.